The Australian dollar to US dollar pair has been trading in a narrow range around the 0.6500 level, with limited upside potential due to concerns about a potential US-China trade war and geopolitical tensions. While a recent decline in US Treasury yields and expectations of a Fed rate cut have provided some support for the AUD, the overall sentiment remains cautious. The Australian dollar to Japanese yen pair has been under selling pressure, with the JPY gaining strength due to rising inflation expectations in Japan. The pair is currently trading below key technical levels and could see further downside if the bearish trend continues. The euro to Australian dollar pair has been volatile, with the euro weakening due to expectations of a dovish ECB. However, the pair has recently found support at the 1.6200 level and could rebound if the ECB surprises the market with a more hawkish stance. The AUD/NZD pair has been under pressure due to the RBNZ's rate cut and concerns about the global economic outlook. A bearish candlestick pattern suggests that the pair could continue to decline in the near term. Overall, the AUD is facing headwinds from both domestic and global factors. While the RBA is expected to maintain a hawkish stance, concerns about global economic growth and geopolitical tensions could limit the AUD's upside potential. The Australian dollar AUD is influenced by a variety of domestic and global factors. Key factors include the relative strength of the US and Australian economies, global commodity prices, interest rate decisions by the Reserve Bank of Australia and the Federal Reserve, Chinese economic growth, and geopolitical events. Additionally, the AUD's value is impacted by the performance of other major currencies, such as the Japanese yen, New Zealand dollar, and euro, as seen in popular pairs like Australian dollar to US dollar, Australian dollar to Japanese yen, AUD/NZD, and euro to Australian dollar. The Australian dollar to US dollar pair is currently trading around 0.6500, facing pressure from potential US-China trade tensions and a stronger US dollar. However, the Reserve Bank of Australia's hawkish stance and positive risk sentiment could limit further downside. The Australian dollar to Japanese yen pair is trading near 98.00, with bearish sentiment prevailing due to weakening short-term price momentum and potential safe haven flows into the Japanese yen. The euro to Australian dollar pair is currently trading around 1.6200, with a bearish bias due to a potential rate cut by the European Central Bank. The AUD/NZD pair is trading around 1.1030, with a bearish outlook due to the Reserve Bank of New Zealand's recent rate cut and potential further downside. The Australian dollar to US dollar is expected to consolidate between 0.6440 and 0.6550 in the short term, while the Australian dollar to Japanese yen is expected to find support near the 100.00 level. The euro to Australian dollar is expected to find support at 1.6100, while the AUD/NZD is expected to find support at 1.0900. The NZD/USD pair has been on a downward trend recently, influenced by various factors. The RBNZ's dovish stance, coupled with expectations of further rate cuts, has weakened the New Zealand dollar. Additionally, global economic uncertainties and a stronger US dollar have contributed to the pair's decline. The NZD/USD pair has been under pressure recently, with the New Zealand dollar weakening due to the RBNZ's dovish monetary policy stance and global economic uncertainties. The pair has reached a multi-year low and is currently facing significant downside risks. The RBNZ is expected to continue its rate-cutting cycle, further weakening the NZD. Additionally, rising geopolitical tensions and potential trade conflicts could further weigh on the currency. While there may be short-term opportunities for a rebound, the overall trend for the NZD/USD pair remains bearish. Traders should exercise caution and carefully monitor market developments. Pound sterling to Japanese yen has exhibited a consistent decline throughout November, shedding 7 yen against the pound. This pattern suggests a potential reversal of both the short-term and medium-term uptrends. Technical analysis indicates that trends tend to extend, implying a likelihood of further downside for the pair. Key indicators point bearish. Price movement: pound sterling to Japanese yen has depreciated steadily since peaking at 199.81 on October 31st. The pair has reached a new low in the 192.80s, representing a 7 yen decline from the previous month. Moving averages: pound sterling to Japanese yen has broken below all three major simple moving averages, 50-day, 100-day, and 200-day, on a closing basis, signifying a bearish trend. MACD, the moving average convergence divergence, MACD, reinforces the bearish signal. The momentum indicator line has crossed below both the red signal line and the zero level. Support and resistance levels. Support, a break below the current low of 192.80 could lead to further losses, with the next potential support level around 189.56, the low of the right-angled triangle formed in late September and early October. Fundamental factors to consider. BOE policy, market expectations regarding the Bank of England's BOE December interest rate decision might influence pound sterling to Japanese yen. A shift towards a more cautious easing approach could support the pound. BOJ policy, uncertainty surrounding the Bank of Japan's BOJ potential rate hike in December could impact the Japanese yen. Reduced expectations for a hike could limit the JPY's upside. Global risk aversion, increased risk aversion due to external factors could bolster the safe haven Japanese yen, potentially weighing on pound sterling to Japanese yen. Overall outlook. Based on the current technical analysis, pound sterling to Japanese yen appears to be in a downtrend with a potential for further decline. However, the pair's direction could be influenced by upcoming economic data and central bank policy decisions. The euro to Japanese yen has been on a downward trend since late October, pressured by expectations of a rate hike by the Bank of Japan, BOJ, and a potential slowdown in the Eurozone economy. This has caused the pair to fall below key support levels and could see it reach new lows in the coming weeks. Technical indicators also suggest a bearish bias, with the pair currently trading within a descending channel. However, a corrective bounce could be on the horizon if the RSI dips below 30, signaling oversold conditions. Stronger opening clearly states the overall trend and main factors influencing it. Conciseness removed unnecessary details and redundant information. Focused analysis emphasized technical aspects while acknowledging fundamental drivers. Flow and readability improved sentence structure and transitions. Maintained key points, retained information on support levels and potential lows. US dollar to Japanese yen price prediction, bearish breakout looms. The US dollar to Japanese yen pair is exhibiting strong bearish signals, potentially signaling a trend reversal. Technical indicators like the MACD divergence and the price action testing the base of a broadening formation pattern suggest a downside move. A decisive break below 151.50 could trigger a decline towards the pattern's target of 148.54. However, there are some counterarguments. The pattern may not be complete yet, and US dollar to Japanese yen could experience a temporary uptick within the formation's boundaries. Additionally, some analysts predict a range-bound scenario. Overall, the weight of evidence leans towards a potential US dollar to Japanese yen decline. Monitoring price action around 151.50 and upcoming data releases like Tokyo CPI will be crucial for confirming the direction of the trend. Clear and concise title, bearish breakout looms, reflects the main takeaway. Strong opening emphasizes the bearish signals and potential trend reversal. Focus on key technical indicators, explains the MACD divergence and broadening formation. Acknowledges alternative viewpoints, briefly mentions range-bound predictions and incomplete pattern possibility. Strong conclusion, reiterates the bearish bias and highlights data points to watch. Australian dollar to Japanese yen price forecast, consolidation below 98.00, oversold RSI. The Australian dollar to Japanese yen pair is currently trading below the critical 98.00 level, indicating bearish sentiment. While the pair has experienced recent declines, an oversold relative strength index, RSI, suggests potential for a short-term consolidation phase. Immediate support lies at 97.45, with 98.76 acting as the nearest resistance. Key factors influencing the pair include the Bank of Japan's potential interest rate hike and the Reserve Bank of Australia's hawkish stance on monetary policy. Geopolitical tensions and global economic conditions also play a role in the pair's price action. NZD/JPY price analysis, downward trend persists. The NZD/JPY pair has recently experienced a significant decline, reaching its lowest levels since September 20th. Technical indicators, such as the RSI and MACD, point to continued weakness in the pair. The shift in Japan's fiscal monetary policy mix, including potential interest rate hikes, is further supporting the JPY's strength. While a short-term correction cannot be ruled out, the overall bearish trend for the NZD/JPY pair is likely to persist.